Today, we're going to talk about a topic that's a bit more morbid and not quite as exciting as your TSP. But this is such an important part of a retirement plan that we knew we had to do a video on it. One of the worst things that can happen to a family is to be caught off guard by the death or incapacitation of a family member. Now, before you think, hey, we're so young, we just retired, we don't have to think about that right now, you're going to want to hear this. It's hard enough for a surviving family to deal with the emotional burden of something like this, but it can be made even worse if they're left with a financial and planning burden as well. We work with federal employees across America, and one of the things they tell us is most important to them is that they don't become a burden for the rest of their family later in life. The first one is a no-brainer, so we'll hit this rather quickly. There are certain legal documents that you need to have in place well ahead of anything bad happening. These are things like wills or power of attorney, also advanced medical directives, or health proxies. These are all documents you need to have in place well ahead of the need so that if something happens, everything is just in order and your family can step in to help take care of things. But there's another that you might want to consider, and those are trusts. We're not going to get into why a trust is important or when it's good or when it's bad. Just understand that it's a tool that can really help you protect your family's assets and decisions about money. But if you're interested in this kind of thing, leave a comment in the box below and maybe we can do a video on it. But there's yet another part in this protection element, and that's in the realm of insurance. As a Fed, you get a FERS pension as well as a Social Security benefit. Well, when you die, as much as half of your pension is going to go away, as well as one whole Social Security. The surviving spouse only gets to keep one Social Security, whether it's theirs or yours, they get to keep the higher amount. But regardless, the survivor to a federal employee is gonna see a significant reduction in cash flow. God forbid, but if this happens earlier in your retirement, will that reduced cash flow create economic stress on top of the emotional burden as well? You need to be modeling it out and look at a scenario where this happens and see, do you have enough assets in the family that if you were to die early in retirement, your family would be okay? Now, when it comes to insurance, the big ones are obviously life, as well as long-term care. Folks, long-term care is really expensive, and so you have to be making sure you're building this into your retirement plan so that you can see the impact one way or the other. So once you have all your documents in order, does your family have a way of accessing them very easily and quickly should the need arise? Often this means that you have them electronically scanned in a way that they can access it very quickly in an emergency. For families who work with us, we give them a private folder where it's cloud-based and they get to upload all of these documents in there totally private. We can't see them unless they want to share it with us. And so when there's an event, family members can go in there, or they can even reach out to us for help if they need to. But the digital access goes beyond just your legal documents. What about your insurance documents, life and long-term care? What about identification? What about emails or social media? Are they able to get into those things on your behalf in an emergency? These are things you always want to be keeping in mind as you think about your plans. The next one is to make sure that all of your titling of accounts have the right beneficiaries. Folks, this is a really important one. Assets that do not have beneficiaries or are not listed in trust name will go to probate. And probate can be timely to settle an estate, it can be costly to do so, and this is the last thing that you want your family having to deal with in a situation like this. So obviously your main accounts like the TSP or IRAs, sometimes 401ks, 403bs, all the different kinds of retirement accounts, those already have beneficiaries on there, so chances are they're correct already. But other accounts like individual accounts or joint accounts, bank accounts, cars, houses, all of these assets will need to be accounted for. Something that we do with our clients is for any individual accounts or joint accounts that they have, even their bank accounts, we do something called a transfer on death or TOD designation on that account. That allows you to add beneficiaries, and that account now gets to avoid probate, and it belongs to the beneficiaries just like your retirement accounts. Now at your bank account, it may be called payable on death, but the concept is basically the same. A lot of people have individual accounts. If you put it into joint name and you're willing and able to do so, then upon the death of one of those members, it automatically transfers to the other person, makes it so much easier to have to deal with that process. And before I jump to the next one, if I've mentioned anything that you hadn't thought of before, will you let me know by hitting the thumbs up on the video? And if you thought of something that I haven't mentioned, do us a favor and write in the comments so that all of us can be thinking about it too. All right, the next thing to consider, folks, is try not to make any big decisions if there's a situation like this. There is a Nobel Prize that has been won in behavioral economics. We're big students of this topic at our firm, and over the years of helping people retire, we've learned that strong emotions and decisions around money are two thought processes that don't belong together. When someone is dealing with emotions on something, whether it's fear of retiring or uncertainty about the markets, or even grieving the loss of a loved one, those emotions can often cloud the decision-making portions of our brains. Now, this is completely normal, and it's important that you understand that it's going to happen. So we always tell our clients to hold off on very big decisions like selling a home that maybe they've inherited, or moving because now maybe their spouse has died, or any other drastic activities. You want to learn to lean on the people in your lives, whether they're professionals or whether they're family, so that they can help you make sound decisions about your wealth and help you come up with a plan that's going to be supportive of what you're trying to accomplish. And so this leads to the next one, which is building the right team. Our clients often find it very helpful to start formulating relationships with professionals well ahead of time so that they can cultivate those relationships and everything can be in place for their family. On the practical side, that's why people come to us for retirement planning, because we're there for them, we're there for their family, we're there for their kids. And so as they're approaching retirement, they come to seek us and we're helping them throughout their lives. But the same is also true for some of your other professionals. Wealthy families know there's 3 professionals they need to have in their lives related to their wealth. And so we've got an accountant, we've got a financial planner, and we also have a third one, which is an estate attorney. Now, a lot of people have these first, but few have the third, which is the estate attorney. Perhaps you might want to think about starting a relationship with an estate attorney that you can meet with every so few years to review your estate goals and make sure that everything is still on track, that all of the documents are up to date, laws haven't changed, and that they can be there for your family in the day that you're gone. Now, at our firm, we encourage our clients to include us in as many of these conversations as they're comfortable. We have the big picture of their overall wealth as their financial planners, and we can often add a lot of value in these conversations. And so when something does happen, we can be there for their family and help take care of all the things that need to happen. All right, so YouTube analytics tells us that 90% of you watching this are men. And so I'm gonna talk to the guys for a minute. By the way, YouTube also tells us that 75% of you watching these videos are not subscribed to our channel. If you're not already subscribed, you're really missing out, so make sure that you click the subscribe button below the video. Okay, guys, so a lot of families that we've worked with have chosen to also write a letter to their family for the day that they're gone. One of our clients jokingly called it the dead dog letter, but this is basically a letter they write to their family about their last thoughts or things that they really wanted their family to remember in the event that they're gone. Now, this letter doesn't have to be very long or complicated at all. A lot of them talk about how much they loved each of their family members and what their favorite memories are with them, and some encouraging words for them as well, as this letter is generally read once you're no longer here. Guys, I wrote a letter like this for my wife Sophie, and it was a tough letter to write. In fact, I had to go back to it several times because I just didn't find the right words that I wanted to use. And so we found that a lot of families really like this idea, both men and women. So that's all for this one. I know it was a little different than our usual video, but all of this is really important in helping you plan a better retirement plan. So we hope to see you on the next one, and until then, stay wise and stay wealthy.